Hello, good morning, good afternoon, and good evening, everyone. Welcome to today's Practitioners Insights webinar on the topic Investment in the Era of Green Economic Transition, hosted by CFA Institute. I would like to take a moment to welcome our audience from around the world joining us remotely. I am Pankaj Sharma from CFA Institute India office, and I'll be the moderator for today's webinar. I lead capital markets policy for CFA Institute from India, and in my role, I am responsible for advocating policy positions on issues that affect Indian capital markets and its stakeholders, including corporate governance, opportunities in different asset classes, impact of demographic influences, and others. Before I introduce our speaker, I have a couple of housekeeping notes. Today's webinar is scheduled for 60 minutes, including presentation, which is for 40 minutes, and question and answers for about 15-20 minutes. We'll be leaving ample time for Q&A after the presentation. So please feel free to submit your questions throughout the presentation. You can do so by clicking on the Q&A icon at the bottom of your viewer and typing your question in the box. The webinar presentation will be available to view after the presentation concludes in the chat box. We immensely valued your feedback, so please complete the evaluation survey before you sign off today. Now, it's my pleasure to introduce our speaker for today's webinar, Mr. Labanya Jena, CFA. Mr. Jena is the head of Center for Sustainable Finance, India at Climate Policy Initiative. He is a thought leader in green and sustainable finance, and in this role, he is leading the initiatives and activities at the Center for Sustainable Finance program in the Climate Policy Initiative in India. At CSF, he is engaged in conducting research to support the financing system in making informed decisions about climate change and building capacity to make the financial system resilient to climate change. I can go on and on, but I'll stop here, because if you have ever come across any discussions on sustainable finance in India, you would certainly know Mr. Jena, and you will be familiar with Mr. Jena's work and significant contribution he is making in this space. Thank you for joining us today, Mr. Jena, and over to you.
Thanks, Pankaj, for inviting me to speak in this webinar, and good to see the participants are interested in the economic green transition we're talking about, because it's no more restricted to social scientists or the politicians or the economy or so. Climate change is becoming material for the financial sector and definitely for investors and lenders. So I'll start with the presentation. When we're talking about that, many of you know that we are transitioning to a green economic era. So one of the key reasons, as many of you know, that we are facing some kind of climate change issues. Okay, very briefly about the issues related to climate change, because as industrialization, as the economy is growing across the world since industrialization in 17th century, we have emitted too much carbon into the atmosphere. And because this carbon stores there and creates severe problems in the earth. And it is creating some kind of physical risk and transition risk for the financial sector. I'm not going into the details of physical risk and transition risk, but it's creating something which is altering the earth system and which is not good for the economy as well as the financial sector. So the question is that how to solve that challenge. Many people in the financial sector must be wondering, okay, what to do with the financial sector when we are talking about climate change, because it's not directly affecting us. But that's not the truth, because as the financial sector is lending or investing in the real economies, and the impact of climate change is affecting the real economies It means that the financial sector will also must take actually appropriate measures to tackle the challenges emanated from climate change. When we are discussing about climate change, so if you go through the World Economic Forum's, every year they come out with survey. So in this survey, they identify the key global risk faced by the economy as well as the financial system. So they identified that in the short term, in the 2 years, there are two risks related to climate change. One is that extreme weather events. So we just saw that yesterday in Dubai, what happened after the storms or after heavy rain in Dubai. That's one. And the pollution, which is more or less connected to environment, not really related to climate change. But if we see on the right hand side, in the 10 years period of time, most of the events, most of the risks are related to climate change. It could be extreme weather events. When I'm talking about extreme weather events, it means that increase in intensity of frequency of weather events. For example, it could be hurricane, it could be storms, it could be floods, any issues related to climate, which is emanated from climate change or attributed to climate change. If there are so many problems related to climate change, what we need to do? Globally, there are commitments from different countries how to reduce climate change. So when you're talking about commitment, it means that we need to reduce carbon emission or greenhouse gas emission from different activities over a period of time. So if I see that what India is doing, if we see India as an economy, so we emit around 3.5 billion ton of GHG every year. In 2015, India committed that we will reduce GHG emission or GHG intensity by 31 to 33% by 2030. But India again upped its commitment. It said that we are going to reduce carbon intensity by 45% by 2030. Okay, how to do that? Definitely, each one of them is that you increase renewable energy capacity in the energy system. We'll talk in detail about that, as well as create additional carbon sink. When you're talking about additional carbon sink, as we know that forestry has a power to store carbon. It means that if the industry is emitting carbon, forestry can capture those carbon and store for a long period of time. Okay, so before that, to identify or see the kind of opportunity we have during this economic transition, we need to see that from where this greenhouse gas or carbon dioxide equivalent is emanating. This is a study conducted by McKinsey. So they released the paper in 2022. So if we see that from where the greenhouse gas is coming, mostly related to power sector, close to 34% out of that coal. Because when we are talking about India's power system, currently close to 75% of electricity is still generated from the coal sector. Okay, close to 25% of electricity is coming from the renewable energy sector. Still, coal is the biggest sector, or I will say that thermal power plant is the largest source of carbon emission in India. In addition to that, there are sectors like iron and steel, cement, mining, refinery, and other sectors, which we say hard to decarbonize industry because these industries face severe technological challenge to decarbonize their energy system or so. It is extremely challenging. In addition to that, agriculture is also contributing significantly to carbon emission, particularly they are emitting methane, which is much more dangerous than carbon dioxide in capturing heat in the atmosphere. Then number 4 is the transportation. When we are talking about transportation, it could be passenger cars or two to three wheelers. It could be ship. It could be long durations, long haul vehicles as well. In addition to that, there are waters and waste and buildings and forest sink as well, because we are also destroying forest as well. So if I combine that, 3 years back, it was 2.9 billion tons of carbon dioxide, but now it is close to 3.5 billion. since our economy is also growing since 2021 or so. Okay, the question is that, as I said, these are the sources of carbon emission. So how we can decarbonize the economy? Starting with, as I said earlier, we need to add more renewable energy capacity to our power system. That's very critical. We need to move away from coal sector. We understand that it's a challenge for our country to move away from coal suddenly, but at some point of time, definitely as a country, or we need to move away from coal, maybe after 20 years, 30 years. How long it will take, I don't know, because it depends on the pathway, technological progress pathway, as well as competitiveness of renewable energy electricity in the power system, and the political willingness, which is very critical, because a significant number of people, their lives and livelihoods are directly or indirectly reliant on coal. Then second is battery storage and green hydrogen. As we know that electricity is intermittent in nature, we need to store those electricity so that whenever there is a requirement of electricity, we can just supply. That's the reason battery storage and green hydrogen is critical for electricity generation, since renewable energy is intermittent in nature. Then we have buildings, energy efficiency, uses of lowest carbon intensive materials, recycling of construction materials. When we are talking about buildings, which is directly and indirectly contributing close to 30% of GHG emission. Okay, it may be coming from, let's say, the kind of construction materials we use. It may be coming from the amount of energy we use in the building sector. Number three is the transportation which we used. Definitely electrification is one of them. We need to electrify our vehicles, and there is definitely battery storage is required when we're talking about electricity, and green hydrogen is going to play a very important role in the long haul vehicles, as well as shipping, and of course may possibly in the airlines industry as well. The inside transportation, we have biofuels, ammonia, as well as synfuels as well. Ammonia is going to be used as a feedstock, or I can say as a fuel for the shipping industry as well. And then number four is the industrial sector. When I'm talking about industrial sector, it's a combination of iron and steel, cement, chemical, this kind of industries which is significantly using energy, significantly using power. So the question is that a heavy amount of power or energy is coming from the coal sector or oil and gas in the industrial sector, primarily coal. So is it possible to electrify industrial sector? It's a technological challenge issue, because if we can electrify the industrial sector, so that we can generate electricity from renewable energy, which can be used in the industrial sector. I understand that there are challenges to electrify the entire industrial sector. It will be very challenging. Then there are applications of green hydrogen, carbon capture storage, and bioenergy. And recycling is going to be going to play a very significant role in the industrial sector. The bigger question, as a financiers or as a corporate, we need to understand that whether certain technologies are commercially viable. If I see the progress of the technological pathway based on the materiality, or I will say that commercial feasibility, certain technologies are currently financially feasible or going to be financially feasible very soon. But there are several technologies which has application, particularly in the industrial sector, will be feasible over a period of time. For example, let's say electrification, when we are talking about renewable energy electricity. So it is more or less technologically feasible as well as financially feasible. Then also energy efficiency, material efficiency is also commercially feasible. Then increased reuse and recycling, I will say that it's not commercially feasible now, but in certain industries, certain materials, actually recycling is also commercially feasible. But certain areas where there are opportunity, it could be carbon capture storage, zero carbon hydrogen production, hydrogen use in industrial sector, novel chemical catalyst and separation, which are used in the chemical industry, as well as new cement industries, which will be the key research and development area in the future. But if we see over in the next 30-40 years, there are certain technology, for example, refinement of existing promising and technology pathway, which will be continuous thing in the next 30 to 40 years. So I'll shift it to again the ability of the technologies to reduce GHG emission and the bankability or investability of these technologies. Because if we see various technologies which has application in iron and steel industry or cement or concrete industry, on the other side in batteries, if I see only the investability purpose, so for example, renewable energy generation or electric vehicle, it includes three-wheelers or two-wheelers or four-wheelers. Even electric bus is highly investable currently. But on the other side, if we see that technologies which has application in iron and steel industry, or chemicals or plastics or carbon capture storage, even if agroforestry, so it's not commercially feasible or not investable currently. That one part. But if I see the other part, what is the climate impact on these technologies? For example, energy efficiency and management is highly investable. So there are certain pathways, certain instruments through which investors can um, invest in energy efficiency or lighting. Okay, but it's not possible that these industries, this technology will have a significant impact on climate change. We understand that energy efficiency is going to play a significant role, but it's a big question mark that is it as impactful like renewable energy generation? The question is no. Similarly, on the other side, on the investability, if we see that pulp and paper, aluminum, shipping, and aviation, it's at a very early stage. Similarly to direct air capture, it's at a very early stage. Okay, so if I say that India's carbon reduction plan or climate actions, as all of you know that India has declared to be net zero by 2070. But in the near term goal of India is to reduce GHG emission by 45%. That's carbon intensity, not absolute GHG emission, by 2030. As I said earlier, that India is going to add 500 gigawatt capacity of renewable energy. I'm talking about cumulative capacity by 2030. But the question is that if we think that okay, we can reach net zero by 2070, what we need to do in terms of capacity? So I have liberally used again from McKinsey, because they conducted a massive study, India's decarbonization pathway. So what they are talking about, that we need to add capacity, both solar and wind, extensively in the next 3 decades or so to really achieve net zero by 2050 or so. Because many scientists or technocrats, they suggest that uh, we need to decarbonize our economic system as quickly as possible, because it is for the benefit of us, for the financial system or the economy, as well as the society. So there is no point in waiting till 2070 to decarbonize or reach net zero by 2070, because it is financially more beneficial to reach net zero by 2050 instead of 2070. There are certain agencies say that, but we don't know what will be the technological pathway in the future. Because what happens that many times the forecasting agency, they lag the technological progress. For example, 25 years back, International Energy Agency, they said that solar will be commercially feasible after 30-40 years, but it took only 15 to 20 years for the solar sector to be commercially feasible. Many times the forecasting agency, the underestimate the ability of the technology or the technological progress ability or so. Okay, so coming back to the capacity required to decarbonize India's economy, as I said earlier, we need to decarbonize our electricity system, we need to invest in storage, and we need to invest in electrolyzer, which is going to be used in generating green hydrogen, which is an important component. So if we say solar and wind, currently we may be adding around 15 to 18 gigawatt of solar and wind now. In 2022, it was lower due to several reasons, but in 2023, it was close to 16 to 17 gigawatt of renewable energy capacity we added in the power system. But in the next 30 years, we need to add close to 250 gigawatt of no, not 250. I mean, starting from 2030, we need to add maybe 48 gigawatt of renewable energy capacity per year, and it needs to increase 134 gigawatt power of electricity per year. The question is that is it possible whether the power system is going to accommodate so much of renewable energy capacity, because we also need to invest heavily in transmission and distribution facilities as well. Okay, so it's a technical challenge, as well as whether there is a possibility that the cost of solar and wind is going to be decreased over a period of time in the next 20 to 30 years. According to estimates of various agencies, even if scientists, they say that, okay, the cost of renewable energy is going to fall further also in the future. Similarly, it is applicable to storage also, because storage cost is very, very expensive now. It's not commercially feasible. But at the same time, we need to remember that cost of storage is declining drastically in the last 10 to 15 years, and it's going to be reduced significantly in the future. It means that we can use more and more renewable energy electricity if we are able to add more storage capacity. According to McKinsey, the storage capacity needs to be close to 1100 gigawatt by 2050 or so. Similarly, electrolyzer capacity, which is required to generate green hydrogen, there is a need to add electrolyzer capacity significantly in the future. Okay, so since I said about green hydrogen, which is going to be significant in India's decarbonization pathway, the currently green hydrogen is very, very expensive. It is close to $7 to $8 per kg, although it is showing 4.5 or so, but I believe that it's more than that. If we are able to reduce green hydrogen cost close to $1 to $2, so it can be commercially feasible and it can be used at a scale in the industrial sector, starting with the industrial sector, and it has applications in the shipping industries as well as long haul trucks as well. So as we can see that as the cost of green hydrogen is going to decline, so there is a significant opportunities for the various sectors to adopt green hydrogen. Similarly, it is related to electric vehicles or so. Two-wheelers have started electrified. Even a three-wheelers, cars is highly commercial feasible. Trucks, basically it will take a longer time because the trucks cannot carry a heavy battery. It is commercially inefficient to electrify trucks. But there are certain other technologies, for example, applications of green hydrogen can be used in long haul trucks that can decarbonize the truck system as well. Similarly, we need to invest in chargers, which is required to charge our clean transportation system as well. Similarly, steel, cement, as well as I said earlier, the industrial sector, particularly steel, cement, chemicals, or irons, or this kind of industries, they need to decarbonize as well. If we see the amount of steel need to be decarbonized, it's going to increase in the future. Even there are certain companies, there is a company based in Europe, although it was lucky to get concessional capital from the government, but they have started manufacturing or producing green steel, okay, by using a varieties of technologies. Similarly, cement as well. It's close to even recycling rate. I don't have much time to discuss all of them, because if we can able to recycle certain raw materials or construction and demolition, we can also reduce GHG emissions significantly from the construction industry, particularly the building industry. And also it is applicable to municipal solid waste as well, because the municipal solid waste generate a massive amount of methane, which, as I said earlier, it is much more dangerous than carbon dioxide. Okay, the question is that, I mean, as participants in the financial sector, what are the opportunities? So based on various agencies, starting from CW to Standard Chartered and McKinsey, this is the amount of capital required to reach net zero in India, 10 to 20 trillion dollar of capital. But we don't know, I mean, nobody knows actually how much capital we need, but it's definitely a massive amount of capital required. And it's a huge investment opportunities for various players. In across the sector, maybe possibly in energy, we can talk about storage, energy access, grid management, battery technologies. Similarly, transportation, we are talking about electric vehicles, batteries, micro mobility or so. Build environment is going to be critical because I can see some of the private equity player is showing a lot of interest in build environment as well, because many customers, they are preferring green buildings, which is much more energy efficient than conventional building. Uh, um, and there is also in waste and circular economies, some of venture capitals and private equity firm has also started investing in waste and circular economy as well. Then water sector definitely is going to be very critical, because we are noticing, I mean, either too much of water or no water available in several places of the country. I mean, particularly we noticed that in Bangalore last month, couple of months back in Chennai also. I mean, somebody told me in Chennai there are no waters in Chennai for 11 months, but for 1 month there is too much water. They said that there is water scarcity in Chennai and water is carrying them in Chennai as well. So we can understand that how management of water is going to be critical, particularly in cities in India. Okay, opportunities in carbon and removal and storage in the industrial sector, as well as climate management. Okay, so if we see the amount of capital required, we need close to $2.5 trillion of capital only in the electricity sector. But if we want to do it very quickly, if I add electricity for storage, we need much more than that. There is a massive investment opportunities, both for lenders and investors. So we can see that some of the storage companies which are listed in the stock market, the stock price are increasing very healthy rate in the last couple of years. Similarly, in the electric vehicles, if we see that the amount of investment opportunities in the estimated number of EV sales, close to 10 crores of electric vehicle sales, and total production cost for the OEMs is around 12.3 lakh crores, which is a significant amount. It means that these auto manufacturers or auto components, they are going to raise this much of capital so that they can manufacture electric vehicle in the future. Similarly, on the other side, particularly for banks or NBFCs, which are providing consumer loans, okay, so it's a massive opportunity for them, because the consumers, the retail consumers, they are also going to buy three-wheeler or four-wheelers or two-wheelers. Even if the commercial consumers also like trucks, electric trucks, or electric three-wheelers, they are going to buy these electric vehicles, and definitely they need financing from commercial banks as well as NBFC. And it's also applicable to charging infrastructure, which needs a massive amount of capital. And if we see the battery manufacturing, it's a massive opportunities, because as I said earlier, we need to add a massive amount of battery to the energy system so that we can rely on renewable energy as a efficient and reliable source of electricity as well. Similarly, it's applicable to green building. A couple of years back, International Finance Corporation, they estimated that there is a potential of investment in green building is 1.4 trillion. Okay, it's a massive investment opportunities, because green the building sector directly or indirectly contributing close to 25% of GHG emission. Secondly, only households and commercial buildings, they are only household actually consuming 15% of electricity in the sector. And all the households, they would like to reduce their energy bills. Okay, that one part. And second part is that many houses, they would like to be socially conscious. So instead of buying the just conventional building, they would like to buy green buildings as well. Let me tell you some evidence available in the other markets, particularly in Hong Kong and Singapore, even European Union also. They said that the green buildings, mortgage securities green mortgage securities, they are traded at a premium compared to conventional mortgage securities. It means that the market is giving a premium to green buildings. So it means that there is a lot of demand of green buildings in the future, because there are certain policies are also coming up in the future which is favoring green buildings. For example, there are certain states, they are giving some additional benefits to green buildings compared to the conventional building. What does it mean? It means that it will be an opportunity for investors to identify the companies or the real estate developers who are developing green buildings instead of just building houses or so. In addition to that, there is a significant amount of investment required in retrofitting existing buildings also, because there are buildings which have been built maybe 10 years, 20 years, and 30 years back. And there is a massive opportunities in the green building as well. On the other side, there is a massive amount of capital required in agriculture. Agriculture is highly vulnerable to climate change as well. In an economic survey a couple of years back, they said that agriculture productivity may reduce by 15 to 18% by 2035. So it means that the farmers are not really ready. 1 second.
My
Sorry.
apologies to all the participants. Yeah, Lavanya, carry on. Yeah.
Yes. So it means that the agriculture sector needs to be to prepare themselves to be resilient against climate change. So there are opportunity in the climate resilient seeds. Some of the venture capitals are also investing in climate resilient seeds. Some of the corporates also they have also identified certain areas where there is investment opportunity. It could be low carbon fertilizer. It could be soil health monitoring, which is very critical, because as a country, the temperature is increasing, so the health of soil is also deteriorating day by day, which is very critical. Then robotic agriculture, where we are using robots also, particularly drone technologies for soil health monitoring as well. Of course, crop health monitoring, cold storage, which is going to be a massive opportunity in the climate smart agriculture, and food processing and harvesting as well. Okay, I'll stop here and take some questions. Thanks, Pankaj.
Thank you, Ms. Jena, for your presentation. As a reminder to all the participants, you can send your questions, and this is an opportunity to understand a bit more about sustainable finance. So I'll also utilize this to ask one of the questions I had. So many times what happens, Lavanya, that people do understand that there is a huge investment that is required to successfully transition towards a greener economy. And as you rightly said, that for a country like India, switching overnight to completely green technologies or renewables is just not possible. However, at the same time, unless we make a conscious effort and attempt, it won't happen ever. So what is your assessment in terms of how we are doing on our progress in terms of adding the renewable capacity, adding solar and wind? Because whatever is happening in the climate change impact in terms of extreme weather events, every time you see that the demand for demand for power, demand for electricity is also increasing. And at the same time, you see that the rising disposable income will also lead to more people buying, for example, air conditioners, refrigerators, and all these consumer durables. So do you think that there is more that needs to be done to add solar and wind capacities? And what is your sense on that?
Yeah, thanks, Pankaj. Yes, I mean, the way we are progressing in decarbonizing the economy is really not desirable, and it is not up to the mark. It is not going to help us the help us to reach our ambition. If we say the global ambition is to limit the world's temperature by 1.5 degree by 2050 since industrialization. I think we have already crossed that 1.5 degree limit. So the next target is to is it possible for us to limit by 2 degree by 2050? The amount of, particularly here in India, we need to add maybe 50 gigawatt, 40 to 50 gigawatt of renewable energy capacity in India to really achieve that 500 gigawatt cumulative capacity by 2030. So I don't think that it's happening. Okay, so I am not sure that India as a country can achieve that 500 gigawatt by 2030. If I see the progress of renewable energy addition, last year we added close to 16 to 17 gigawatt of renewable energy capacity. Okay, so it means that it's a challenge for us to reach that. There are a number of challenges. I mean, one of them definitely financing is one of the challenges, but I'll talk about that later. But other side, we also need to say that whether as a country, because renewable energy still rely on other technologies, for example, battery storage or so, or the grid, or the transmission system. We need to invest heavily on the transmission system so that it can evacuate electricity from one place to another. So that's also need a massive amount of investment. It's not happening yet, although government of India is sincerely trying to invest in transmission system as well. Number three is that we also need to invest in storage, because without investing in storage, how are you going to store those electricity? Because wind doesn't flow all the time, we cannot see sun all the time as well. So we need to store this electricity somewhere. And now cost of storage is very, very expensive. I think close to $8 to $10 per kilowatt of energy, per kilowatt hour of energy. So we need to cut it down to $2.5 rupees per kilowatt hour so that it's commercially feasible. It will take a longer time, because as a democratic system, you cannot overnight decarbonize the entire economy. Then there are also social challenges as well, because a significant number of people, for example, in the state of Chhattisgarh, Jharkhand, and Odisha, these are coal belt. Their GDP, a significant percentage of their tax or gross domestic product is coming from the coal sector. Okay, their life and livelihoods are reliant on coal sector. Okay, so you need to provide some kind of assistance to the people, because many of them are highly unskilled. They don't have capital, they don't have social capital as well, and unlike us, they cannot move from one industry to another industry very, very quickly, or from one state to another state very, very quickly. So that's another reason why it is taking time for a country like India. Still, it is a developing country. It's trying. But if I talk about the developed countries, even if they have the financial disposal, they are not able to do, because they are also facing political challenges in their own sector, and there are also corporate lobbies also is exist in these countries as well.
Thank you, Lavanya. I think it was very comprehensive and insightful answer. Uh, we have a question from Sagar Bhavnani, and he asked, can you please explain the carbon credit policy in India? How carbon credits are allotted to one company, and how can carbon credits be monetized?
Okay, there is voluntary carbon credit in India. It means that people can voluntarily buy carbon credit, okay, from a seller. Okay, it's not a rule actually. It's not a rule or regulation, although there is a framework developed, okay, for voluntary carbon credit. But unlike Europe, where we have a carbon market, there is no carbon market in India or so. Although in the industrial sector, there is a carbon market exist, but it's highly inefficient. That the second question is related to, I mean, even if we don't have a carbon market, so a large number of industries, they are selling or they are exporting their products to other countries. For example, steel industry is currently facing carbon emission issues in the European Union. So there is an act called CABM, okay, which is going to affect the profitability of steel industry. Okay, it means that you need to do something. Okay, let me explain you how this carbon credit work. Okay, for example, let's say there are two companies. Okay, let's assume that there are two companies in an economy, and the government will say one company can both companies are same size. They will say that okay, maximum you can emit 100 kg. One company will emit 90 kg, another company emit 110 kg. Okay, the company which emitted 90 kg can sell 10 kg to another company. The question is that how can you create a market out of that? Since somebody is buying carbon credit from another company, so there is an incentive to invest in low carbon technology so that you can reduce your emission and you can create carbon credit and sell it to the market. But the challenge is that market is very, very volatile. Okay, now we are witnessing carbon credit in Europe close to $90 per ton. I think 5 to 6 years back, it was only $15. Okay, the carbon credit crashed also just after financial crisis in 2008. Okay, because everybody was talking about how to save the financial system, not the earth. Okay, carbon credit market crashed. So that's a bigger risk investors are facing, even if they're investing in low carbon technologies in this space.
Thank you. The next question is from Rashmi Mehrotra, and she's asking, are most of these opportunities related to sustainability and transition, are these opportunities in the venture capital stage, or is it something which is beyond that?
There are, if I see the technologies, okay, some of them are which are scalable in nature are already scaled up. For example, solar and wind. Okay, these businesses are scalable, where you will see the participants of commercial banks, NBFCs, even equity market, because some of the companies are listed in the stock market are pure play renewable energy companies. Private equity have a presence in storage also in electric vehicle. I have seen private equity companies, they have heavily invested in electric vehicle directly or through NBFCs. Okay, because the NBFCs which have created a separate window actually only to finance electric vehicles, particularly three-wheelers, particularly in three-wheelers, because it's highly commercial feasible. You can also notice that e-commerce companies, they are electrifying their entire logistics just to reduce their cost. Actually, it's cost competitive. For venture capitalists, there are opportunities, particularly the technologies which is not scalable immediately, or it will take a longer time. For example, venture capitalists are still exist in storage also, because there are certain storage chemistry which is at a very early stage. But although it's not happening here in India, but it's happening in other countries. For example, heat rigid. For example, for example, drought resilient seeds, for example, which is not scalable right now, but venture capitalists have existence in those sectors which are at a very early stage. In addition to that, there are certain technologies which is application in developed countries. For example, drone, for example, which can be used actually, I mean, large farmers, they can use drone technology to see, just to monitor the health of the soil. So they can also use those technologies where venture capitalists can play a role. Another interesting point I would like to highlight here, certain venture capitalists, they are also buying forest also. They're investing forest on the hope that after 10 years, they can store this carbon, then carbon price can also increase in the future. They can sell in the market. I can see a very few venture capitalists, but they're individuals, they're highly driven. They're also investing as well.
Thank you, Lavanya. I think your point on drought resilient seeds, like it actually strikes a chord, because in India we always had millets, and we, like a year back, we celebrated the global year of millets as well. And these seeds are naturally resilient to like survive in very low precipitation geographies, and they're very popular in those areas. So like already nature has provided us with options, and some of these things can also become much better. But again, we move on, and the next question is like I'm not sure whether I'm pronouncing the name correctly. So my apologies if I do it wrongly. The question is from Mihela Sioleni, and it's about do you think India's plan is ambitious enough and it's on track to achieve net zero by 2070?
I will say 2070 is a long way, very difficult to say. But if I see what the scientists are saying, I will believe one scientist, whether it is technically feasible. The scientists say, yes, it's technically feasible, and humans have capacity to develop new technologies which are zero emitting in nature. Okay, that's possible. That's one part. Second is 2070 is a long way. I think India as a country definitely it can achieve, because as an economy we are growing, and there are also financial incentives also if I decarbonize our system economy, because we cannot rely on coal for a long time, although we have too much coal in our country, but at the same time we're importing coal as well. Okay, and secondly, India is also heavily spending in oil and gas, and mostly we're importing oil and gas from other countries, and vulnerable to all the wars or whatever happening in the countries who have too much of minerals and oil and gas available. So it is I mean, it's wise for the country to move away to rely on oil and gas as soon as possible. So it is financially beneficial for the country also.
Thanks. I think this is a great point, Lavanya, because as somebody very wise said that uh, too much reliance on long term is bad, because in the long run, and very long run, all of us are dead. So I think 2070 is something which, unless we divide this into smaller parts and make progress in that time frame, it's very difficult to take a call on what's going to happen in 40-45 years. So thank you for your insight, Lavanya. We will move on, and we will take up the next question. And what we are currently looking at is there is also a concern with a lot of people that as an investor, can we make investment in such a way that we can make impact? So Shraddha Rungta, she has a question that how can an investor or an impact investment make a difference on a larger scale?
Okay, so there are different ways, and impact investors, what kind of capital it provides? Mostly impact investors provide concessional debt capital, or the provides capital, risky capital at a very early stage. Okay, for example, the breakthrough ventures which started by Bill Gates, for example, it is investing in technologies which are going to reduce a carbon emission over a long period of time. It means that you are becoming a risky investors. You are participating where nobody else is participating. Okay, that's very critical, because the probability of success in these technologies is very low. So as an impact investor, definitely you will say, okay, this technology has a potential to reduce carbon, okay, when it's applied at a scale. But as an investor, as a commercial investor, it's feeling it's too risky to invest. Even if in the United States, we keep on saying that venture capitalists, they are the people who have invested, who have come out with all these technologies. In reality, it's the government who have invested heavily in these technologies. I mean, they have got grants from government to have all these technologies. Here, impact investors can play a very significant role. That yes, you need to invest at an early stage of a technologies. That one part. Second part is that at certain stages, when you are scaling up the technologies, the technology may not be commercially viable. Okay, how can you make it commercially viable? Okay, then the users can use these technologies. Okay, because let's say it's a commercial financiers or private equity or venture capitalist. Okay, they have a very short horizon of investment. Okay, VC firm can stay in an investment for 3 to 5 years. Private equity can stay for 5 to 10 years or so. Okay, there are many technologies which is not possible to be successful or commercially viable in the 10 years. So can the impact investor stay in the investment longer than 10 years? That's another way to look at. Then number 3 is that there is sometimes required something called a concessional debt, or something called a partial credit guarantee. Okay, can impact investors provide this risky capital? Okay, it is expecting non-financial return in terms of impact. At the same time, it is expecting some financial return so that it can be sustainable. Okay, so in that case, impact investors can see that where I can bring additionality. So I mean, in development finance, it's called development additionality or financial additionality. Impact investors looking at both the type. Development additionality, if you are able to reduce carbon emission, you are anyway creating development additionality. In terms of financial additionality, the venture capitalist can look at how much capital it can crowd in by investing at a later stage of technologies by providing concessional capital, maybe a small amount of concessional capital of the entire capital required. It can also attract a massive amount of private capital, which is essential.
Thanks. The next question is from Yasuyuki Toyosaki, and it touches on the important role which government has, and you spoke about, Lavanya. And the question is that what are the current major policy tools used by the government to facilitate green economy in India?
Okay, currently, definitely in the renewable energy sector, for example, I mean, there is no transmission fees for renewable energy transmission. It means that it will add a burden for the renewable energy generator because it will not be competitive. Okay, that's the policies. Then we have in electric vehicle sector, we have that FAME scheme, which is still there, but there is a question mark that FAME scheme is only available for electric vehicle. It's a big question that whether government is going to continue that. Okay. Actually, I'll talk about more from financial policies because there is a possibility that the government may add certain, I'll say, renewable energy sectors or low carbon technologies as a part of priority sector lending. So it means that there is a possibility that they will also get a significant amount of capital from commercial banks. There is a possibility. Okay. In addition to that, government is also giving signal how they are going to support in decarbonizing the economy as well. For example, recently the government announced in the last budget close to 16,000 crores of subsidies for green hydrogen. Okay, which is a significant amount of capital. Similarly, government is also announcing subsidies for manufacturing solar PV modules in the country because we are still relying on China to meet our solar PV systems requirement. So government is providing subsidies, that's a financing in nature. At the same time, it is also creating an ecosystem which is good for investment in low carbon technologies. We can also see some of the steps taken by, for example, Reserve Bank of India, which is a financial regulator, not really a government, but it is giving a signal that okay, the banking sector needs to integrate climate change risk in the lending decision making. It means that they are going to penalize the carbon intensive sector and they are going to incentivize the climate friendly sector. So those kind of signals are also coming up from the financial regulators as well, except the government.
Thanks, Lavanya. I think it's an important point because we have to look at again in a part by part approach, so that we have to look at what each stakeholder can contribute to. The next question is from Rajat Kumar Talai, a student from IIM Lucknow, Sustainable Management. And the question is that there are few nations which have built both solar and wind combined plants for renewable energy because there are problems with land availability. So do you think that this is economically feasible in India, or can it work in India?
We definitely, I mean, some of the good quality of wind locations has already been taken by investors. Okay, so many, I can hear that developer are also struggling a good quality of locations, which is feasible. But I also need to say that there are offshore wind technologies, okay, deep offshore wind technologies, which are coming up in the future. I mean, companies like General Electric, they are heavily investing in this new offshore wind technologies. It's not commercially feasible now, but in the future, maybe 7 to 8 years down the line, the wind technology is possible. Answering to his question, we need a varieties of technologies. We cannot rely only on solar to generate renewable energy electricity. So definitely we need both solar and wind, because for example, wind is available maybe at night time where solar is not available. Okay, as solar is both the sources of electricity are intermittent in nature, you need both solar and wind. You cannot rely only on solar all the time.
Thanks, Lavanya. I think it's a decision which actually needs to take care of the local context. You have to make policies and efforts in such a way that they are suitable for the local context. Anyway, we'll move on. And the next question is from Ankur Gupta. And it's a relevant question because what he's asking about, what are your views of the impact this transition can have with the current anti-ESG and climate environment, especially in the US? Also, is it fair to compare developed and emerging markets with the same set of expectations? Because the level of investment required and affordability will be very different for each of them.
Okay, there are two questions here. Definitely, there is anti-ESG. I mean, particularly in America or the states actually, who are earning a significant amount from oil and gas. I can understand like states like Texas or so. So they are against ESG. Even they threatened BlackRock that why you are promoting ESG, we are going to withdraw money. Okay, which is not a good signal, because even they are getting the political support also. Okay, 97% of scientists, they say that climate change is true. Okay, you cannot deny scientists. Sometimes we question scientists, which is not good for us. So it's a big question mark whether, I mean, it's more related to ESG, but when I'm talking about ESG in the today context, it's mostly climate change in nature, not really more about social and governance. That will be my answer. Second is definitely we cannot compare emerging and developing countries with the developed countries, because they are the culprits actually. They emitted too much of carbon. Okay, and they are pushing developing countries and emerging countries, okay, you need to do hard. Okay, which is not possible at all, because as a country, for example, 2 years back, renewable energy company, they could able to raise capital at a rate of 2% in the US, but in India they could raise at 10%, 11%, or 2%, 12%. That one part. Second part is all the time we talk about whether we have enough capital available in the country. For example, even if I go through, I mean, McKinsey study or study by CW, they say that we need around 150, $200 billion on an average. Okay, starting with $50 billion now, maybe in 2040, $300 billion of capital required. So, I mean, do the economy has that much of capital available? Because if I see the total capital expenditure of both government as well as the corporates, last year it was close to $250 billion. So you cannot expect that half of the money is going to be invested in green, or even if 40% of the money is going to be invested in green. That's not possible at all. Okay, it means that you need to raise capital from other countries. It's a big question mark of what is the cost of capital. Okay, as a corporate, you need to say that. Okay, if the cost of capital is high because the hedging cost is very high, okay, and all these developed countries, they will say, no, I'm not, I want to reduce carbon emission, but I will not provide you concessional capital. It doesn't make sense. It's not possible. You cannot compare a developing country to emerging economy. There are several other challenges. We have challenges related to education, healthcare, poverty. Okay, definitely climate change is one of them. So climate change is one of the priorities, but we cannot say that it's the highest priority. We need to focus only on climate change. A developed country, they can only invest 1% of their GDP. They can still invest a significant amount of money in low carbon technology and meet their commitment. Still, they are not doing. So they cannot expect the same from developing countries.
Thank you. Very quickly, we'll just take up the last question, and it's on a related topic. It's a follow-up from Rashmi Mehrotra, and she's asking, why would global investors prefer to invest in India rather than in their own countries? So is it because the returns are higher here, or what is the driving force?
Of course, return are higher there, so they don't. They are not noble. Okay, so all the time they would like to earn higher return, because they are seeing that India as a country is growing. It means the stock market is going to grow. The bond market would grow. As if you are coming as a private equity investor, you can list themselves. They can list themselves in the stock market, maybe in India or abroad. So there will be capital appreciation. So even in the low carbon technologies, I mean across storage, renewable energy, green hydrogen, I can see a significant participation of foreign investors, from global pension funds to investment to commercial banks, even if sovereign wealth fund and certain energy corporates, pure play oil and gas company. Okay, since they are also diversifying or divesting their carbon intensive assets, they need to redeploy their capital somewhere. Okay, they are coming to India as well. So as India is a country of opportunity.
Thank you, everyone. This is great. And Mr. Jena, especially to you, thank you so much for sharing insights with us today. It was insightful to me personally, and I believe that it will be as much insightful or even more for the audience and the participants in this session